All right, so today we want to talk a little bit, as we go into what everyone is predicting to be a down market and likely will be during recessionary periods. A lot of agents always want to understand or know, where can I get the business? Because business is a lot harder to get. The plus side, though, is typically speaking, in a recession, a lot of agents get out of the business, so you have less competition. So although business is harder to get, there is less competition that you're competing against if you know where to look. So today I want to try and help a little bit about, if, during a recessionary period, where do you find the business? Now, leasing, for the most part, is leasing. Business doesn't stop when it comes to recessions. So companies will continue to lease, some may have to downsize. So following the news and understanding that, when it comes to the leasing side of things, if a company is downsizing, then they may need new space and sublet their old space. So you have two different leases that you could potentially do. Sublet the space that they're currently in, and then get them a new space that fits their needs now. Same goes for leasing on the retail side. There are certain businesses that actually do very well in down markets or recessionary periods. You want to target those and go after them because they're the ones that are going to be expanding. The whole key is really understanding the marketplace and reading everything, all the news, who's expanding, where they're expanding, what they're doing. Now, sales. Sales are a little bit more difficult because a lot of times a owner doesn't want to sell during a recessionary period because they think they're losing money. The value of their property is not as valuable as it was 6 months ago or a year ago. So the idea, again, is education. Although their property may have gone down in value, so have all the others that they might be exchanging or purchasing into. So it can be a wash, and really what you want to look at then is more about the returns. Is this property performing and giving the best return for that investor now, or are there other options that maybe give a better return, or maybe safer, or long-term leases on it? Those are things that you want to take into consideration when you pitch them and explain to them. Ultimately, when someone buys a property for an investment, they're not buying it typically to hold for the rest of their life. Like any investment, it should be analyzed, at least annually or semi-annually on how it's performing. And if it's underperforming and there are better assets that they might be able to purchase at the same price by selling and exchanging, then it may be an opportunity to take a look at that and have them take that next step and do the sale and then the exchange. Other ways. You hear a lot about REOs, real estate owned, bank owned properties. Frankly, I think that for the most part, unless you already have banking relationships, it is very difficult and almost a waste of time to go after a lot of the REO business itself. Those banking relationships are typically set during the good times. You've been speaking with them, you've talked to them, you have this relationship, and you have to be vetted out and approved by the bank. So it's not like someone just coming in and saying, do you have any properties I'd like to list them? Banks typically do it, they have a very a process for any vendor or broker that's going to be helping them sell their assets. So instead of that, what I like to look at instead is, well, on the lending side, what loans are coming due? Especially in a down market, on a commercial loan, all commercial, won't say all, but majority of commercial loans have a 10-year term. So that means that they're due in 10. There's a balloon payment in 10 years. Now, during that 10-year time frame, they may have paid off about a third or so of the loan amount. The issue that arises, however, is that in a down market and with interest rates higher, they may not be able to refinance because the debt service coverage ratios may not be enough. So they may have to actually put cash in to refinance to pay that balloon payment. So in those scenarios, those are potential opportunities to get them to sell the property. If you can't refinance it and you potentially could lose it or hurt your credit, or if you have a personal guarantee on it, affect your personal credit as well. Instead of that, they're going to sell the property. So you can also target those people who either have refinances that are coming up, either have balloon payments coming up, things along those lines. I would probably typically look for about a 2-year window, meaning you don't want to call somebody that has a balloon payment coming up in 3 months, because it's not enough time really to get that listed and get it sold. But instead, rather go into it and look at the loans that are coming due within the next 2 years and start calling them, letting them know ahead of time. Again, you're farming the group of people, you're educating them, you're getting them aware that their loan's coming due, that the best option may be to sell, or you might be able to refinance. And a great thing about commercial real estate is that as a broker, we can also get referral fees on the loans. So even if they don't sell and they do refinance, if you have good lending contacts, you can refer them to that and still makes a little bit of money for your efforts and work. Okay? Now, the last way of getting business, or a really good way of getting business during recessionary times or down periods, is identifying those people who actually need to purchase property, typically 1031 exchanges. So, we talked about earlier how things don't necessarily change going into the recession, but as the recession comes, people are still selling. People are still, business is still moving along. But generally speaking, most people with investment property, they want to take advantage. The real reason to purchase real estate are the tax advantages as well as the income that's coming in. So they want to maximize those tax advantages. So they may have to sell, or they may be in a time to sell. They may have owned the property for quite some time. They may have depreciated it all out and they want to sell at increased basis. Whatever the reasons are for selling, it's identifying those people that have sold, that need to sell or are selling. So one of the tricks that you could potentially do as well is look for properties that are in escrow and contact the ownership saying, I understand that you're selling this property, and are you looking to do an exchange? I specialize in exchanges. I'd like to help you out, look at different options and opportunities. You can also contact the broker as a referral base as well, if you know them, and reach out to them and say, is your client planning on doing an exchange? If they are you helping them? Is it the same type of asset class that you're selling, or are they looking at something different? Like, a lot of owners in the last 10 years have sold multifamily and gone into single tenant net lease assets. And most multifamily brokers can't handle single tenant net lease. So if you specialize in single tenant net lease, you may get referrals from them as well. So those are ways that you can really, during a recessionary period or a down market, to increase your business and get business. Those are the main ways to do it. So that's any questions?